The Dow closes at 19,023, only some 12 sessions since it passed 18,000, as the RUT, the Dow, and the SPX all make all-time new high closes. 8 of 10 sectors moved higher on Tuesday. XLRE, XLY, and XLB were the strongest sectors, while XLV was the weakest sector. Oil futures fell 43 cents to close at 47.90. Breadth was steady compared to the prior session as advancers led 2132 to 900 on the New York Stock Exchange and led 1719 to 1047 on the NASDAQ. On the S&P 500 snapshot, another record close. The S&P 500 logged its second consecutive record close. The index opened higher, traded sideways for about 45 minutes, and then sold off to its negative 0.17% intraday low. It recovered to the flat line during the early afternoon and then resumed its rally in the later afternoon, rising to its 0.30% intraday high just before the final bell and a final trend gain of 0.22%. The yield on the 10-year note closed at 2.31%, down 2 basis points from yesterday's close. The 30-year bond remained unchanged at 3%, 1 basis point off its interim closing high at the end of last week. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:15 a.m. Mountain Time, and I am recording this in preparation for the market day of November the 23rd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into our morning report. At the time of this cut, the markets were really very quiet. All four the U.S. broad-based indices were rotating just around scratch. Crude oil was down about 1/3%. Euro was down just below scratch. Bonds were at scratch, and gold was down about 1/3%. In overseas action, China was down almost 1/4%. Hong Kong at scratch. Japan up about 1/3%. Germany down about 0.5%, and the United Kingdom up about 1/4%. So very mixed, but not any kind of significant action on any of these markets in the overnight. In terms of macroeconomic reports for today, the day before the holiday, we actually have a full slate of macroeconomic reports. So the typical behavior of the market before a holiday is maybe a little action in the first hour and then basically to get quiet and go sideways and really dry up in the afternoon. Well, with today's slate of macroeconomic reports, it's possible we may have an atypical pre-holiday session. We have core durable goods. Unemployment claims is moved from Thursday to today. We have durable goods. We have new home sales, which is important following the home report yesterday. The University of Michigan consumer sentiment, crude oil inventories, nat gas storage, also another report that's usually on Thursday, moved to Wednesday. And then FOMC meeting minutes. So a lot on the slate today to be digested and priced into the market. In terms of current volatility conditions, you can see short-term VIX very low at 10.2, skew just above the warning threshold at 127. IV percentiles are all exceptionally low. The S&P at 15, the Russell at 18, the NASDAQ at 11, and the Dow at 16. One market did put in a standard deviation move yesterday. That was the Russell, coming in with another positive 1 standard deviation move. In terms of the current charts, let's go ahead and go there and reposition that just a tad better. There we go. And you see the recent price action, the very important area of resistance that we broke through 2 sessions ago with a good strong bullish candle with a very strong follow through and confirmation on that. We have backed off just a teeny bit with the current price action after setting an overnight intraday new high at 2203.5. So this certainly has been very, very strong short-term bullish action, and this is also reinforced, as one of the morning authors mentioned, by the other markets. You see the Dow also broke out of its short-term horizontal resistance pattern, had a good 2 sessions, and has built on that with last night, and is now solidly up over 19,000. It was only a few sessions ago we were below 18,000, and on the election evening we dropped to as low as 17,400, and now we have established up over 19,000 as closing highs. So Dow absolutely continues to be very, very bullish on the short term. And then the Russell also new highs, and we have moved up above this channel. So in terms of just how far we could go, we could use fib extensions and so forth. Perhaps some yesterday I heard were suggesting we could go another 40 points before you hit one of those fib extensions. At some point here, obviously, we would be looking for something of a retracement, at least a sideways consolidation pattern, if not an outright retracement, given just how large this move is, considering what Russell has done in its history. This move is just about the largest, it may be the largest move in history without ever having any kind of pullback, and not a single red candle in this run. So let's take a look at the NASDAQ. NASDAQ has made up a lot of ground, and indeed the comp Q is at record new time highs. The regular NASDAQ futures are only just a few points. We're about, let's see, 16 and 19. We'll call it 30 odd points away from the all-time highs. Certainly well within 1 day's price action should the tech-heavy index choose to get some energy and momentum and take on that overhead resistance. So that's the only index that we follow that is still below the resistance, and certainly it is also in a short-term pattern been quite bullish. We'd like to see both the NASDAQ and the Russell powering this market. That is the kind of prototypical orientation of a strong bull market, is to have these kind of higher beta, growth-oriented industry groups and so forth kind of powering that move, and the more defensive and stodgy sectors in the Dow and S&P, making their own new highs, but perhaps not, the same relative rate as these two. In other markets, crude oil certainly has had a very strong short-term action, and it's kind of stalled near the top of the cloud. Relatively neutral overall, about the middle of its current range in the cloud. Short-term pattern, though, is bullish. We need to get a higher high, and right now this would seem to be a lower low and a lower high, and that would give you a bit of a bearish bias, while the overall position within the range action would be an overall neutral bias. So crude oil not clear in a trend on the intermediate term time frame by any measure. And then in other markets, let's go ahead and take a look at the dollar. The dollar had backed off a little bit. Obviously, this really strong dollar makes it somewhat difficult for the big multinationals and so forth. At the same time, it has its impact on gold and crude. Very, very strong move we've had with the dollar of late. We did get a little bit of a back off a couple sessions ago, but we're back up near those recent highs again on the dollar. So the dollar's probably the most pronounced move in the overnight session of all the futures markets that we've taken a look at. In terms of bonds, bonds seem to be in a short-term consolidation pattern. Likely will continue to go down, though we are starting to come into this area with significant horizontal support, so that may give some pause to the kind of crush that has been experienced in the long bonds. And I think we missed one market. Let's see. We did. Oh, we need gold. There we go. Gold, much like bonds, at an important horizontal resistance. If it breaks down through 1200, it probably falls another 100 points pretty easy. There's not much here to catch it other than perhaps fib extensions. But in terms of kind of traditional support and resistance, not much down here until you get down another 100 points. So we could see quite a significant drop in the gold market if we get past this shelf that we're sitting on right now. Let's take a look at volatility before we move on. As you would expect, volatility is exceptionally low, just above the 12 handle, and could be coming in towards its one-year lows in the 11 handle without too much more subsiding in the volatility metrics. That should be enough in the charts. Let's go ahead and go to the daily report. Intermediate term phase opinion is currently market phase 3. The expectation is bull flags in that pattern. Obviously a very bullish and probably one of the longer phases in the cycle. In terms of the 3 market timing signals, the first one comes to us from IBD, confirmed uptrend, bullish. The second one, GMI index, still a very strong 6 out of 6, bull signal in place since 1110. And the third one from Stock Charts Decision Point Scoreboard. This one is still quite mixed, but much improved compared to, say, 3 weeks ago. Short term universally is bullish. Intermediate term has dramatically improved in recent sessions, and we now have 5 of the 8 signals are in the bullish camp. So we still have some mix. Long term is still mixed as well. We need to see that series of higher highs and higher lows to be able to give us a healthy bullish trend, which is something we've not had in 2 years, as you've heard ad nauseum during this much range-bound market. So let's see if we can finally establish something of a normal healthy bull trend and start really making not just incremental new highs once every several months, but real highs and consistent highs. In terms of the position sizing opinions, both are at 100%. Intermediate term market posture, all 4 at severely strong bull levels, so very strong signals coming from there, supported by a weak bullish sentiment line. Overall hedge warning status remains 0 plus normal, with some elevated conditions, primarily looking for this stack on the Stock Charts Decision Point Scoreboard to resolve themselves to all bullish signals. In terms of strategy opinions, no change from yesterday. All 3 opinions are giving us permission, as it were, to initiate new positions for even novice traders, though there is some suggestions still here for some conservativeness in the structure of the position, but we'll start backing away from that. We'll start looking for more of a 2-to-1 ratio, or I should say 1-to-2 ratio. I suspect if we continue to get any kind of confirmation on this breakout. Love to see a higher high and a higher low, and then followed by a higher high, and we definitely would see a much more aggressive stance on these positions should we start to get some real movement away from the current range. It's been so much a part of our picture. In terms of current volatility warnings, we really only have 2. The distribution day count is at a 7. And the skew actually is up above 125 just barely, so it's running about a 9% probability of a 2 standard deviation move in the next 30 days. So 2 there, not too concerning. Trend base, very strong. Bull, severely strong bull, well up over 300 on the new highs. Very strong in terms of the trend. Key intermarket risk aversion, very strong. All 5 on risk on, with good angle and separation in the indicators, so very strong there as well. So very little here in terms of areas of concern at the present time. Fear and greed index up at a 67, so starting to become a bit more extreme in the last couple sessions, but if we get up over 75, we certainly are starting to get perhaps an exhaustion type of territory from a sentiment standpoint. In terms of sector specific, you can see pretty much a sea of green with the exception of healthcare yesterday. Telecom, very strong. Real estate bouncing back. Consumer discretionary materials. Consumer staples having a stronger day than many days of recent. Utilities also a stronger day than many days of recent. Financials, a bit of a ho-hum day for it compared to its recent activity, perhaps starting to show some consolidation and digestion of the recent very, very large moves. In terms of market postures, we continue to see this bit of a sector rotation showing itself. Consumer staples, healthcare, utilities, clearly not in the same camp as some of the more risk-on, like the financials, materials, and technology, which have been doing much better since the election. We're starting to see a lot more green across the different time frames on our percent change, and it's not just about yesterday, but the 5-day, 1 month, 3 month. Really, it's down to 4 sectors in terms of the 1 month and 3 month more intermediate term time frames being productive. So things are definitely starting to shape up here to where in strong bull markets, you kind of expect all boats to be lifted with that tide to various degrees. Well, we're starting to see more evidence of that. So even with the sector rotation kind of putting a hit on some of these, they've started to bounce back and stabilize, and you're starting to see, frankly, all the ships rising once again. Okay, I think that's probably enough for today. Let's go ahead and do our wrap up. One thing to note, I'll scroll through these. If you see something of interest, just hit the pause button. I don't spend time in all these slides each day, but just kind of pick out one here and there. If you want to see how we put all this information to action on the way we manage our core portfolio, and then as we get healthier and healthier markets, also engage in higher levels of swing trading, option income strategies, and the like. There is a live trade chat room. This is a chat room. It's just a matter of checking in and reading any new updates from time to time. There's no need to listen to me chatter all day long by any means. This is not a day trading room by any measure. This is about managing a portfolio and then using some options to be able to also do some option income trading and some swing trading and so forth, selling put spreads, stuff like that. But this is only $50 a month, and you get a whole host of other materials that help you with your investing and trading each day, mailed to you. If you'd like to check that out, there is a 2-week trial. Just go to this website that's indicated here. You can get additional information, and we'd love to have you in our room. And there's additional information about the free trials and how to become a member. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. And we'll see you back here Monday morning. We will not broadcast. Of course, tomorrow's the holiday, but we will not broadcast on Friday. We typically take the Friday after Thanksgiving off every year. It should be very, very low volume, not much happening. We usually take this as a 4-day weekend. So our next session will be on Monday after the holiday and all the traders come back and return. So until then, manage that risk profile, and you should see the consistency come together. And then, of course, seek each and every trading session to learn something about your craft. Good trading.